Well, Discovery has reported a 19% increase in first half normalised headline earnings per share. That's to 241 cents. The company declaring an interim gross dividend of 431 cents. Discovery CEO Adrian Gore now joins me to delve into their first half earnings and the plan going forward. Thank you for joining us, Adrian.
Thank you. Thanks for having me.
So overall, let's just look at the growth that we saw coming through for the period. Headline earnings per share, normalised headline earnings per share up 20%. Across your businesses, what drove that growth?
I think across the entire group there was very strong, robust growth. So in our established businesses in South Africa, we grew 15%, but in the emerging businesses, particularly in the UK with our Prudential JV, we grew over 70%. So there's been a kind of a very strong performance, I think, throughout. And I think the core of it is the business model of kind of making people healthy and building that into insurance that provide a very strong competitive advantage. And I think we're seeing that play out.
When it comes to the life business, obviously key earnings driver right now, sitting at 1 billion or just over 1 billion. Earnings were up there by 17%. What type of lapses are you seeing? The market was looking at that figure.
The lapses, in fact, have come down quite significantly. So through the financial crisis, lapse rates went up generally. We went up with them, but in fact, they've come down to kind of all-time lows, way below expectations. So I think that, together with better mortality experience, continues to drive the embedded value and the value inside Discovery Life.
And you mentioned the JV that you have in the UK, a market that has, of course, gone through and continues to go through a recessionary environment. You've got austerity there. You've got a lot of changes to the regulatory environment, but yet earnings were up, profits up 99%, new business up 46%. Why do you think the market there, or your business there, is turning?
I think that markets generally and customers respond to innovation. I think with difficult times, they're even more kind of choosy at solutions that meet their needs. We focus very hard, particularly in Protect, on different kinds of products, adding value, and it's paid off remarkably well. I'm a great believer that the time to build a great business is in difficult times, because as the market lifts, you're then established. And I think the period for Health and Protect has been absolutely remarkable.
And market share gains you're seeing on that front?
Incredible. I think our life insurance business captured 10% of the intermediated market, and it's kind of jumped places in the league table every quarter, literally. So I think that what we're doing there, taking a lot of the learnings from the South African market, playing it out there very carefully, has done incredibly well. I mean, I'm optimistic we can continue to do that. We can't grow at that rate every year, obviously.
Yeah.
But I'm very confident we can continue to grow very strongly.
And of course, Vitality is the innovation, really, one of the key innovations. You've taken it to the United States now. You talk about that soft step into that market, testing the waters there. How's that partnership working through Walmart?
Look, it's early days with Walmart. The partnership really is with Humana,
yeah.
the health insurance. We have about 2.5 million lives on the chassis, so it's substantial. The Walmart partnership is around the healthy foods idea. So we're pushing that out with Woolworths here. The learnings we've taken to the US with Walmart. The initial indications are incredibly positive. It's such a crisp, simple idea, Just how you do it, that's, I think, difficult. But I'm excited.
So what's the hardest
potential.
part about implementing a system like that in a new market?
Well, I think implementing it anywhere is how you get the actuarial savings to work in such a way you can afford it. The other issue is it's a very physical product. People need to go into the store and they need tools to understand what's healthy, what isn't. They need to be linked to the tool, to the till slip. In the case of local, that it's actually on the till slip. So this is a very physical product that needs to kind of have an experiential feel. So it's technology, it's pricing, it's actuarial savings. It takes time. We have a lot of learnings from the healthy foods benefit here that's been incredibly successful.
Now, if you just look at kind of the earnings contribution across the business, basically the established businesses contributing 15%, emerging businesses contributing 71%. Am I correct? In those numbers? Growth-wise,
yes,
yeah.
That's right.
And then
right.
You've got 10% of your earnings which are going into the new businesses. Yeah. Tell us about the model that you're using there, where you've got established businesses, cash-generative businesses feeding new growth initiatives.
Well, I think the approach which we think is entirely appropriate is to use our ability, our IP, to build new businesses. So Discovery's approach has been organic growth from the outset. In fact, we've made one acquisition in our history in the UK. And the approach then is that you kind of, in a sense, are always funding new businesses. And as they come through, they become emerging businesses. And then they come through to established businesses. And I think in the period under review, you see that playing out. Two very big established businesses growing nicely at 15%. The emerging businesses growing at 70%. And then we have three fantastic platforms for growth: Discovery Insure, the Chinese business with Ping An, and the US JV with Humana. So as they move through, hopefully they drive that growth. And through that kind of cycle, you build a significant capability.
These are still loss-making entities. Of course, you talk about the J curve and everything. So when do you expect these businesses to become profitable, at least break even?
Look, in the case of Discovery Insure and Ping On Health, these are big potential businesses, and I think we're careful in terms of not trying to rush them. My sense of it is a 3 to 5 year burn typically we've seen. I would guess that Ping On Health itself is in an amazingly growing market. We are very careful about it. China is complex. The health insurance market is growing. It's going to take us some time. I think Discovery Insure can turn relatively quickly. I think in 2 or 3 years, I think we can see a profitable growth. But Discovery Insure has grown remarkably.
And you've got the same kind of concept there to drive initiatives and incentives really to take out Discovery Insure. Do you find that those are working?
Incredibly. It's not to take out the product. The idea is to actually make people safer and healthier. So the simple idea is to use incentives to get people to drive better. And the receptivity to the product, the response to the incentives has been tremendous. And that's driving the new business growth. So, we're kind of learning more and more about this and kind of extrapolating into different markets.
How many customers do you have with Discovery Insure right now?
We have probably around 35,000 cars, probably thereabout, and growing rapidly. We have about 450 million of premium in force, in a sense. It's a business that's 18 months old. So, I mean, it's good going.
So let's talk about China, because you talked about refocusing your strategy there. You've got 372 employees in the country right now. And so talk to us what that means. I mean, because you've gone in there, now you've refocused it. Why is that?
Not quite refocused. I mean, what we try to get across is the idea that
adapting and understanding.
The JV is about building a fantastic health insurer in China. The market is going to grow. Until now, it's been focused on different kinds of business. Our feeling together with Ping On is about health insurance business per se. So we've really reworked the products on the group side, the corporate side, and on the individual side, we launched Vitality, and we're trying to focus a business in those lines. We've set careful goals for each of those. So, I've made the point clearly. I think we've got to kind of first base for the business. It's there, it's established, the systems are there, the people are there, the channels are there, and I'm confident we can grow. But we're kind of applying a bit of discipline together with Ping on the focus of the business. And it's an amazing market. It's massive. The healthcare spend is massive.
How does that healthcare spend per capita relate to South Africa?
Well, the total, give you a few statistics, the total spend is 10 times ours on healthcare, right? The amount that's insured is 3%, and the out-of-pocket exposure is close to 40%. Now, it's 40% of the total spend is out of pocket, and no one has health insurance. So it's one of the big bets in China.
What is the attitude towards insurance? I mean, can you change that attitude? Can you get more people to buy products like yours there? I
think it's inevitable. I mean, if you look at any emerging market above a certain income level, people start buying insurance. But I think China, one of the attitudes that we have to work with is that people are not used to paying for a kind of a risk premium, and if they don't claim, they get nothing back. It's a very strong savings culture. So the product we developed is about actually, if you don't claim through Vitality, you get money back. So there are different methods we're using, but the market will inevitably grow. It's about being in the front of it, getting in the right space, working with Ping On. We're optimistic about it, but I think it will take time.
But the bulk of your business still here in South Africa. So give us a quick view on your outlook for the next half year.
Look, I think that across the entire group, the velocity that we've created will continue. I think the UK is growing very nicely. I think South Africa, but Discovery Health particularly, is well positioned. Discovery Life is also well positioned. So I don't see much change in the short term. We have to pursue the opportunities we've opened. We have to close them down and do well with them, and the other opportunities. But I think for the rest of the year, I think that the pace and velocity will continue.
Are you concerned around consumers though?
When you say concerned, I mean
concerned around people coming under pressure, perhaps lapse rates rising.
Definitely. Look, in the health business, it's remarkably sticky. Health is kind of not negotiable, and we've seen that lapse rates have come down, ironically. So it's quite remarkable. But I'm concerned that our fundamental role is to keep healthcare costs under control, and that's what we're here to do. And it's a difficult task. It's a battle every single day. So I'm concerned about that. Am I concerned that we're going to see dramatic lapses? No, I'm not. I'm seeing the opposite. In our book, our lapse rates have come down. The Discovery Card Credit book is performing remarkably well. In health, the stickiness of the book is tremendous. So we're seeing quite the opposite. But I'm a great believer that you must be paranoid. You must fight every single day to improve the business. And we're doing that.